Most beginners focus on stock price growth and forget one of the most powerful ways to build wealth: dividends. Dividends are cash payments companies give to shareholders, providing real income even if the market is volatile. Many investors underestimate how these payments can grow over time and compound into significant wealth. Dividends also offer a layer of stability during market downturns, providing income even when stock prices fall. They are a way to let your money work for you while you sleep. Today, we'll show you 5 dividend-paying stocks that deliver real income and explain how you can start building a reliable cash flow stream from your portfolio. By the end of this video, you'll understand how dividend investing works, why it's effective, and how to pick the right stocks for steady income. Now, why dividend investing works. Dividend investing focuses on buying stocks that pay regular income in addition to potential price appreciation. Dividends are a portion of profits paid directly to shareholders, usually quarterly, and they create a steady cash stream. Reinvesting these dividends can compound wealth over decades, sometimes outperforming growth-only strategies. Dividend stocks are often established, financially stable companies with predictable earnings. They provide both safety and income, reducing the stress of relying solely on market gains. Dividends also reward long-term patience, which builds confidence and discipline in investing. Even in down markets, dividends continue to provide cash flow, giving investors flexibility and confidence. This strategy suits long-term investors who want income plus growth. Consistency in dividend investing turns small investments into meaningful wealth over time. 2. How to identify good dividend stocks. Not all dividend stocks are created equal. High yields might seem attractive, but extremely high dividends can signal risk or an unstable business. Focus on companies with a history of consistent dividend payments, growing dividends over time, and strong financials. Look for metrics like payout ratio, dividend growth rate, and debt levels. Dividend aristocrats, companies that have increased their payouts for decades, are particularly reliable. Analyzing the company's competitive advantage, market position, and stability is crucial to avoid surprises. Balance is key. Moderate yield with growth potential often beats extremely high yield that could be cut. Consistency, sustainability, and growth are the pillars of a strong dividend stock. Strong fundamentals combined with regular dividends create reliable passive income over the long term. Tracking into stock 1. Johnson & Johnson. Johnson & Johnson is a healthcare giant with decades of dividend growth. It has consistently paid dividends for over 50 years, making it a reliable choice for income investors. The company's diverse portfolio of medical devices, pharmaceuticals, and consumer health products provides stability and reduces risk. Healthcare demand tends to remain strong regardless of market cycles, making J&J resilient in downturns. Dividend reinvestment can turn even a modest investment into significant long-term income. Its consistent dividend growth makes it ideal for building a passive income stream. J&J's broad product lines help reduce dependence on any single market segment. The company's strong balance sheet ensures dividend sustainability. This stock is perfect for conservative investors seeking stability and long-term cash flow. 4. Stock 2. Coca-Cola. Coca-Cola is a classic dividend stock, famous for its consistent payments and global brand. It has increased dividends for more than 50 consecutive years, demonstrating reliability. The company's beverage products maintain strong demand even during economic slowdowns, providing stability for investors. Coca-Cola's moderate dividend yield, combined with growth potential, makes it an ideal income stock. Dividend reinvestment allows your initial investment to compound while you collect cash payouts. Its global distribution and strong brand loyalty provide confidence in ongoing profitability. Even during recessions, consumers continue to buy everyday beverages. Coca-Cola's scale and international reach make it a resilient income stock. This stock fits both new investors and those looking for steady income in retirement. 5. Stock 3. Procter & Gamble. Procter & Gamble is a household name producing essential products from cleaning supplies to personal care items. Its dividend track record spans over 60 years with consistent growth. Demand for P&G's products is relatively recession-proof, giving investors reliable income in all market conditions. The payout ratio remains sustainable, ensuring dividends are supported by strong cash flow. P&G combines stability with modest growth potential, making it ideal for conservative dividend investors. Its diversified product line reduces exposure to individual market risks. Reinvesting dividends further accelerates long-term wealth accumulation. The company's consistent strategy and brand recognition support reliable future dividends. This stock demonstrates how stability and essential products can generate consistent passive income. 6. Stock 4. Realty Income Corporation. Realty Income Corporation is a real estate investment trust that pays monthly dividends. It focuses on commercial properties with long-term leases to creditworthy tenants. Monthly payments provide investors with consistent cash flow, perfect for supplementing income. Realty Income's diversified portfolio and careful tenant selection support dividend sustainability. Known as the Monthly Dividend Company, it has increased dividends steadily over decades. Real estate exposure adds a different asset class to your portfolio, enhancing diversification. Monthly dividends give investors frequent cash flow to reinvest or spend. Its business model is designed to survive recessions, providing stability. This stock is ideal for investors seeking regular cash flow and long-term reliability. 7. Stock. 5. McDonald's. McDonald's is a globally recognized brand with a strong dividend history. It has increased dividends for decades, supported by a business model that is resilient to economic cycles. The company's consistent global revenue stream ensures steady dividend payments. McDonald's combines a reasonable yield with long-term growth potential. Dividend reinvestment allows compounding to work in your favor, turning a small investment into a meaningful income stream over time. The franchise-based model reduces operational risk while generating stable cash flow. Even in economic downturns, McDonald's continues to attract customers worldwide. Its global brand and strong financials ensure dividends remain secure. This stock is particularly suited for investors seeking both income and exposure to global consumer staples. 8. How to build your dividend portfolio. Start by choosing a mix of stable dividend-paying companies across different sectors. Include healthcare, consumer staples, real estate, and industrials for diversification. Focus on dividend growth, sustainability, and reasonable payout ratios rather than chasing high yields. Consider reinvesting dividends to maximize compounding over time. Balance your portfolio with both high-growth and defensive dividend stocks to withstand market volatility. Regularly review your investments and adjust based on business performance and market conditions. Avoid over-concentration in a single stock or sector. Setting clear allocation targets ensures consistency and helps reduce risk. A disciplined approach ensures a steady income stream and long-term wealth creation. If this guide helped you understand how dividend investing can generate real income, start building your portfolio today. Evaluate which dividend stocks fit your goals, consider reinvesting payouts, and diversify across sectors for stability. Share this video with someone who wants to create passive income. Subscribe for more investing strategies and hit like to support content that empowers smarter decisions. Take control of your financial future by using dividends to generate steady cash flow and watch your wealth grow year after year. Begin with small, consistent investments and let compounding work its magic. The earlier you start, the sooner dividends become a powerful engine for financial freedom. Track performance, rebalance periodically, and avoid chasing yields that are too high. Don't wait. Start your dividend journey today and build wealth that pays you back consistently